Welcome back to the Culture of Currency, where we have another Wall Street Journal market report where we're going to check in and see how the metals did overall, and on a macro scale look at the markets so that you get a bigger picture of how metals are moving in contrast to the rest of the market. So let's go ahead and get into this. This is the front page of the Wall Street Journal, my favorite publication when it comes to anything having to do with business. So let's go ahead and get into our market analysis, which is right here. All right, so first off, we have our Dow Jones Industrial Average, which is probably my favorite place to look, and it did exactly this, where basically it's been rising, as you see, December, January, February. It's been rising consistently. It's slowed a little bit, and then we, at the end of this week, had a little bit of a dip. But the number right there is what you want to look at. We're at 44,000. We were roughly at 38, 39,000 not too long ago, and we have risen all the way to the 40s over the last couple of months, which is a great place. It shows a good trend in the markets. We have the S&P 500, which is the composite 500 biggest companies in our stock market, sitting at 6,000 points right there. And it also has a trend of this over the last couple of months, and you see that it has dipped. That little dark is the red. At close of the market, dipped just a hair, not much to be concerned about in either of those. And our composite seems to be a rocket ship flying, though it did dip too. And a lot of people contribute the dip that we saw to the AI industry and its movements with the echoes, I should say, of the movements of what happened with the Chinese AI coming in at so much less valuation to get where they are. But here we are, my favorite part, the winners and losers, and look who's right here towards the top. Yes, we have natural gas finally climbing. It was like negative 70% or 17%, last week, and it has come back. But look here, our friend, copper. Copper is sitting there. It's had a rough and tumble couple of weeks, but our copper has finally come back up 7.5%. So that's interesting. Not sure exactly why, but it is what it is. And then we go back down. Obviously, wheat's an awesome indicator of many things globally. We have gasoline prices that have risen in value, 2.24 right there. Gold, look at that. Gold moving up 1.95, which is amazing. The Canadian dollar, after it has negotiated and come to an agreement to push back 30 days of tariffs, goes up. It was negative. It is now up 1.69. We'll see if the peso did the same. We keep going down here, and we finally hit silver, which is still positive. It's not the gains that we saw the last week, but it's still in the black here, which is not a bad place if you are somebody who is holding for value. If you are somebody who's a collector like me, who wants to see silver down back at $15, $18, then we're just going to have to wait possibly forever, and that's okay. Mexican peso also up, probably once again in retaliation of getting 30 extra days on those tariffs, so it got to see a little bit of a rise in its dollar's weight because it was down. All right, and we keep going. Looks like we're in the negatives here. That's the line of demarcation. Is there anything worth considering down here? Looks like we have a couple right at the fold. The dollar index is right here, and it's just a hair under, not much there. The Dow Jones Industrial is just a bit low. We saw that when it was at 44,000. We saw that little bump on the negative side. And then down here, we see -2 and -3.58% for the consumer discretionary spending and the communication services of the top 500 and the S&P. So that's interesting as well. But we do normally see a dip in the first quartile here in January, as many people spent a lot of the money for the holidays, and then you can get into the reserving phase. Maybe it's one of those New Year's resolutions, that people have that says, I'm going to spend my money better this year. And then come April, they forget about it. All right. So in case you're interested, this is the Consumer Rates and Returns to Investors right there. You can take a gander at it. But yeah, that's kind of where we're at for this week. Not too much exciting other than copper had its day finally. Silver still on the top side. Gold still on the top side of things. We saw that the movement with AI was the biggest distributor of movement as far as the markets as a whole. We saw NVIDIA finally regaining its footing, but taking a dip here at the end, and other AI things like that. So that is interesting. The tech sector seems to be pushing the markets quite strongly. And in fact, there's a chart in here you might want to see that talks about the breakdown of our stock market in the year 1812. Something I find interesting because, as you know, our stock market right now, as far as the breakdowns when it comes to different areas of the market, we are now in the technology, healthcare, things like that, make up a giant portion of our stock market. But in 1812, we were a developing nation. And check this out. The biggest sector was banking back then in 1812 in this stock market. Then we had the insurance agencies right there. Transportation, look at that. So turnpikes being made. This is the infrastructure happening in 1812. We had industrial manufacturing, obviously the Industrial Revolution being a big part of that. Transportation and canals, sorry Panama, but yeah, transportation and canals happening so that we could move stuff. Bridges, of course. We had mining going on. Consumer products, mercantile, right there, 2.3 million, which is just a small percentage of everything overall. We had utilities way down here, and we had fisheries right there. So you can see how much in the movement of our economy from 1812 to now has shifted, and that's probably a pretty good indicator of health. Obviously, banking being a huge thing because everyone stored their money, but when we see things like turnpikes and canals and all that bridges, those are infrastructure things and show developing nations when those are the forefront of your stock market or your money movement in your nation. And now we are such a comfortable, some would say fat, I'm not saying that, but we're such a comfortable nation that the majority of our market is made up of things that are not needs but wants, like tech or consumer products. It's just crazy. Obviously, we have insurance and all that kind of stuff in there, healthcare because people always die, but you can always kind of understand the economy and the development of a country based on where the money is. And in America, there's a lot of money in things that feel good, whereas back in the day when you were developing a nation, it's things that do good, such as how do I get to Meemaw and Peepaw's house? Well, I got to go down the canal or whatever. So it's just interesting stuff. I thought you'd like that. But that is another week in Metal Watch for our Wall Street Journal. Come back next week for more. If you like this type of stuff, let me know in the comments below. If I'm wasting your time, let me know in the comments below. But as always, please remember to stay classy and current with the culture of currency.